Hello and welcome to CIMA Australia's exam preparation series. This is the March 2015 Management Case Study Exam Preparation Film 2. And before you watch this film, if you haven't already, please have a look at the Taking Case Study Exams film in the exam preparation series first. And also before you watch this film, make sure that you've watched the exam preparation Film 1 for the management case study. What I'm going to talk about in this film will make so much more sense if you've seen exam preparation Film 1 first. So let's just recap first what we talked about in Film 1. The management level is about translating strategy decided at higher levels and communicating it to lower levels for implementation. So the idea is that it would monitor and report on the implementation of strategy and ensure corrective action is taken when required. And it has a medium-term focus. So when you come to your exam, you need to keep this very much in mind, that your job is to translate strategy. Your job is to communicate to lower levels of an organization to implement. Your job is to monitor and report on the implementation and make sure corrective action is taken. So it's a medium-term focus. You must keep that in mind. We looked at the syllabus, E2, P2 and F2, and we sorted it in Film 1 into the hierarchy of learning outcomes, and we saw that financial reporting seems to have a bigger share of that learning outcomes than perhaps other things like sources of long-term finance. That doesn't mean that sources of long-term finance won't arise, but the probability is that there'll be questions in the area of financial reporting more than there will be long-term finance. In Film 1, we also looked at the role that you will play, and the role that you will play in the Build case study is a senior management accountant. And your target audience is going to be the CFO, the Chief Financial Officer, or in this case, the Finance Director, and senior business managers. And the case study focus in E2 is going to be consideration of key stakeholders and implementation via projects. In P2, product and pricing decisions and/or the performance evaluation of divisions or components of divisions. And F2, the impact on the financial statements and the performance of the organization. So when we were looking in Film 1, we needed to have those in mind to identify some of the issues that may come up in the exam. You also need to refresh yourself with the verbs, the learning objective verbs. For example, level 3 verbs are about application, and you need to understand what the verb apply means, what the verb calculate means, etc., etc. Please refresh your understanding of verbs, and in particular levels 4 and 5, because you are a senior management accountant and certainly have questions that will use some of these verbs: produce, prioritize, interpret, for example. So now what we're going to do is we're going to go through the general syllabus of each of these pillars, E2, P2 and F2, and we're going to look at some potential question candidates for each of these units. So in this little table, what we're looking for are question candidates for E2 on the left hand side. We've got the code E2A1. A1 is a set of learning outcomes, and the general learning outcome, for example, for E2A1 is strategic management. And the little tick underneath the case study column tells me, or indicates to me, is there something in the case study that relates to these learning outcomes? And if it is, what would I be looking for if I was going to plan or prepare for an exam? Now, what I'm going to do, these are my ideas. I don't know what's going to happen in the exam, and you need to be sure for yourself. You need to have your own idea of what might come up in an exam. I can't foreshadow that for you. In one short film, I can't go through the whole syllabus for E2, for example. So what I'm going to do is to say, having looked at the built case study, these are the things that I think you might want to consider, making sure your revision is up to date, or making sure that you have revised. But again, you may have your own ideas. So these are my ideas. So let's start with strategic management and competitive advantage. So what I'm going to do is I'm just going to raise some topics, and I'm going to talk about them in the context of the case study and tell you why I think this might be an area that you might wish to look at more carefully. It's clear that looking at the built case study, the share price has suddenly dropped very quickly. There is a very competitive environment. It looks like the industry is on one of its cyclical downturns. There's large competitors who seem to be better placed to take advantage, and there seems to be the introduction by the government sector, at least, of a partnership financing initiative. And all of those things would suggest to me that Built is going to have to consider or anticipate some sort of change in its strategy, because at the moment it's looking very vulnerable. So the first thing I would want to do is to understand the environment much more and develop some what's called strategic intelligence. Some of it you can glean from the case study, but there might be other intelligence that you might wish to get. How can you get this? So that you've got a really good picture about what's needed to combat the competitive environment. As part of that strategic intelligence, it would be very useful to understand some competitor analysis. We're given some information about one of the major Constructmore, their largest competitor, but competitor 2 in the market, we don't know much. We don't know anything about that, except there is somebody. So one of the things that we need to do if we're going to change our strategy is we need to understand our competitors, so that we can perhaps try and predict what they might do or what they can't do. So some better intelligence about our competitors would be useful to us. And what sort of things would a management accountant be expected to play in that role? Well, it's here. And analyzing relative costs, analyzing market share, analyzing cost structure, analyzing competitive behavior. So understanding your competition is vital before you can construct a strategy, which it seems to me Build obviously needs to do. One thing that this strategy might wish to determine is, or two things, does the competitors have any vulnerabilities, and what is, if we're going to compete with these people, what is the battleground that we might want to choose rather than letting them choose it. The next thing to me that seemed obvious about reading the Build case study was how inadequate their goals and objectives seem to be. In fact, they're almost non-existent. Meeting budget seems to be the only goal that they have. So one of the things that we might wish to consider as a management accountant, giving advice to various people in the organization, is what sort of goals and objectives might we put in place for this particular company to deal with the environment in which it's operating and the competitors which are arranged against it. And as you're probably aware, these goals should be smart, they should be long-term and short-term goals, and there should be consistency. Goal congruence, it's sometimes called. So how are we going to develop those goals and objectives? And you may get asked about MBO, management by objectives. Goals are broken down into targets, or CSF, critical success factors. What CSFs are essential for Build to deliver competitive advantage? As a management accountant, you could certainly have a large contribution into a discussion like that. Learning outcome B1 talks about the concepts of leadership and management. And we need perhaps to think about leadership. There's a question mark whether this company Build is being led properly, or is the leadership need to be changed in some way. So we need to think about what sort of leadership do we need when we're going through this change process. Are there some new approaches, some new ideas that need to be introduced somehow? Are there some influences that perhaps a management accountant can bring to help build or fulfill these organizational objectives? And what sort of leaders are needed in this time? Transactional leaders or transformational leaders? And what sort have Build got? So again, a conversation with yourself about what types of questions might get asked about leadership may prove fruitful for you. We also need to consider this concept of control theory. What sort of control is this organization got? They've got 3 subsidiaries. There's a team at head office. There's a team in the subsidiaries. Are they based on markets? What sort of basis of which they've set them up? Well, at the moment we see it's simply geographical in some areas, partly geographical, north, south, central, east, that sort of thing. But what sort of control is there over these subsidiaries? Do they have proper plans? Do they have proper measurements? Do they have proper comparison of performance? Do they have corrective action when they're off track? So this provision of a mechanism by which control can be exercised is very important. And this is something, again, a management accountant ought to be able to contribute to say, this is the sort of feedback system or cybernetic control system that we need to have to make sure that we have the right structure and the right feedback so that this structure continually improves. So continuous improvement would be a good target here. We're going to look at the structure of the organization. We might also need to have a look at the teams. What sort of teams are in place and how are they operating? Are they multi-skilled? Are they multidisciplined? Or are they just groups of people? And the theory, of course, of developing a team, forming, storming, norming, performing, this sort of process. There may again be something here that a management accountant could contribute in a discussion about how might we develop teams to operate in a different sort of control environment, as we've just spoken. And if we're talking about changing strategies, then we need perhaps to understand the triggers for change. What's happening here in this business build? Well, there are quite a few environmental factors. Obviously, the first one, competition, economic conditions. Not government legislation, but government policy in this case, where they're bringing in this new methodology called PFI to fund building projects. Very important, perhaps. The supply chain. We've had a look in Build about the way that they buy materials. Maybe that needs to change. There's a whole bunch of factors here that we need to consider. And obviously, if we're going to stay in business, there might be some rationalization that needs to happen. And one of the obvious ones, looking at the organization structure, is that 2 of those subsidiaries seems to me could easily be argued that they should be joined into one. Is there anything in the culture that needs to change? There's a lot of engineers, a lot of people with project management skills and construction skills, but is there some need to have more business skills in the business? Maybe that's an opportunity, a factor. And learning outcome D2 talks about concepts involved in managing projects. Well, this whole company, Build, is a company based on projects. Every single part of its business is based on projects and managing projects. So it is called a pure project organization. And it has some permanent organizations and a flexible ad hoc labor force. Although that labor force, you need to try and keep hold of it. So you've got a lot of subcontractors that you have trust in, and you need to try and keep those. So it may be that you might want to go back and have a look at the way projects are structured by matrix. And so as this is a project organization, I think it would be pay dividends to go back and understand about how projects are organized and could they be organized in a better way. And obviously a management accountant or a senior management accountant could add to that conversation. So there's some ideas for you to explore further in E2. And so now let's have a look at P2. And again, in the same way, I've listed the learning outcomes. There's quite a number here that relate to the case study, competitive advantage, responsibility centers, performance measures. So let's have a look at some of the areas of P2 that might be useful for you to refresh your memory on or do some revision about. Well, the first learning outcome is competitive advantage, and to understand competitive advantage, it certainly is a good idea to understand the value chain that this company Build finds itself in. This is just a part of the value chain, the internal part of Build, but of course there's the supply value part of the value chain and the customer part of the value chain that needs to be considered as well. So let's just refresh our mind here about value chains. It's a model of primary activities and support activities. And the focus is external, back to suppliers, forward to customers, and traditional management accounting just looked inside the internal organization. But current day management accountants look at the inputs for supplies and the outputs to customers and look at the whole value chain. And competitive advantage, which is what the first learning outcome is gained from providing better customer value for equivalent cost or equivalent customer value for lower cost. And so value chain analysis is essential to determine where an organization's costs in the value chain can be lowered or where value can be enhanced for a customer. So again, it's a conversation that you may get asked to participate in an exam environment. In what ways could competitive advantage be obtained by examining the value chain for a company like Build? Something like that you might get asked. It seems very clear to me that the performance indicators in this company Build are quite inadequate, and it may be that you will be asked to contribute to some ideas about what sort of performance indicators might be required. The first ones, of course, would be financial, and the two performance indicators or sets of performance indicators that would be probably useful in this arena is liquidity, because obviously liquidity is something that is a competitive problem, and particularly with the advent of this new PFI. And the profitability. Margins are very tight. There seems to be that we need to understand profitability. And there are some comparisons. There's some comparisons in the case study material between Build and Constructmore. So again, you needed to double check those calculations to make sure that you were happy that they were calculated properly and they were giving the right sort of information by which you might make some decisions. It seems to me that one of the things that Build would be useful to Build would be to consider the introduction of something like a balanced scorecard, so that they get a more holistic way of looking at their business. So this, as I'm sure you're aware, instead of just looking at the business from a financial point of view, is looking at from a customer point of view, quality, performance, on time, that sort of thing, but also looking at the internal business, quality, skills, looking at innovation, and looking at some of the performance measures that might be related to the balanced scorecard and to a construction company like Build in particular. So when we're looking at the case study for Build, we have to consider, are the divisions or the subsidiaries structured as divisions? Is that the right way to do it? How are they measured? Do they actually have the authority to move? Are the goals of each of these divisions congruent with the overall strategy of the business? And I think there's some area here that you may get asked about. What are the advantages of having divisional structures? And in particular, one of the things that I think is important here is the way that built is structured, is that adding costs? Could there be a better structure that takes out some of the costs, which are increasing, it seems, and look quite high compared with their larger competitor Constructmore? And when you're looking at divisions in that way, then it certainly follows that you've got to consider what sort of responsibility accounting structure that will go with that. Are they cost centers? Are they really real investment centers? If you're having a subsidiary in southwest of the country, subsidiary southwest, is it an investment center? What sort of controllable costs can it really manage? And what are the uncontrollable costs of this business? And in the reporting sense, are the costs split into variable costs and fixed costs? From the reports that we've seen, the reporting is very rudimentary and certainly needs to be overhauled. So the area of responsibility accounting, to me, might be an area that needs to be looked at carefully. And following on from both of those comes this performance appraisal, which would be what form of investment of performance appraisal should we introduce? Should we introduce ROI? Should we introduce residual income? And I think it may be that you might get asked to give the pros and cons of each of these types of performance appraisal. We're thinking of introducing residual income. Is this a good idea? What are the bad things, or what are the downsides for it? So one of these, return on investment or residual income, would be a suitable measure. And which one would be suitable for build and why? So I think it's appropriate that you perhaps review what you know or what you remember about these two performance appraisal methods. I think also that in addition to ROI and RI, you also need to consider the economic value added method of a performance appraisal. And it's a performance measure, as you know, like RI, but it's based on economic profit, not accounting profit. And it takes into account a capital charge based on the entity's weighted average cost of capital. Now, weighted average cost of capital is certainly something that will come up in F2. And so here you have something that will combine performance, evaluation, and WACC, weighted average cost of capital. And if you could explain the difference between EVA, RI, and ROI, and also bring in the fact that there's some weighted average cost of capital involved in here, I think you might find that very useful. So EVA is something I would seriously consider making sure I knew about. Another area of the syllabus that is, to me, important is transfer prices. And when you look at the case study, the potential for transfer prices isn't obvious. But what's happening is that the development subsidiary is passing over to the investment subsidiary any building that they haven't sold. And obviously there's got to be some intercompany transactions here. And so maybe it's not a traditional transfer price that is considered normal, but there will be a charge from one to another. And is that charge eliminated? Are the intercompany profits, for example, eliminated on consolidation? How is that treated? And I just think it's a possibility that you may get asked about the intercompany transfer of properties between development subsidiary and the investment subsidiary. So now let's have a look at F2. There's not a great deal mentioned of long-term finance, except that it seems from the case study that some of the loans have been secured, which could be a worry. When we look at A2, weighted average cost of capital, I already said that that may be linked to economic value added, and that's certainly something that I would look at that combination of the two. And so what we're going to do now is look at some of these accounting standards and see how they relate to the case study. And finally, we'll have a look at ratio analysis and performance improvement. So let's have a look at a few accounting standards that may be related to the case study. The first one, simply IAS 1, the presentation of financial statements. We've got to make sure that all transactions should be accounted for in accordance with their substance of financial reality and not merely with their legal form. So is there something in the transfer of these buildings between one subsidiary and another that has not been properly reflected in the accounting statements? We need perhaps to look at IAS 17, leases. There's an indication in the case study that there are some operating leases, off-balance sheet operating leases. Have they been treated properly? And it wouldn't be a bad idea for you to look at IAS 11, construction contracts, because this whole business is based on construction contracts. We've had a look at the related party disclosures, transfer pricing. Is that going to affect the transfer of a building, a large office building, from one subsidiary to another? Has it been properly disclosed? I think something that would be very useful for this company is to have a cash based on IAS 7. It seems to me cash flow is a key issue in this case study and is a key issue in its competitive environment. And it would be good to understand where the money was coming from and where's it going. So having a cash flow showing operating, investing and financing activities, and there may be some questions for you to calculate or check cash flow payment using direct method or indirect method. And so that would be an area that I would be interested in looking at. Also, it doesn't appear that there's any cash equivalents, but again, you need to refresh your understanding of cash equivalent. So related to the transfer of building from one subsidiary to another, you also need to consider that there might be some depreciation arising from the carrying value of the asset, and how is all of that treated? That's one issue with the statement of profit and loss and other comprehensive income. The other part is that the profit and loss, as shown in the case study, has no mention of the other comprehensive income, and again, you need to perhaps consider, is there some reason or that's not been shown, or does it need to be shown? You're given plenty of information about earnings per share. IAS 33 shows you the calculation for earnings per share. It might be important for you to do some calculations to try and understand what's happened with the earnings per share over time. And certainly you're given the information to compare that with the competitor Constructmore. It seems to me very clear that you're going to be asked about ratios. And although you won't get asked to do large calculations, calculating ratios from information provided should be okay, should be something that you can do with the calculator that you're going to be provided in your exam. And so the calculation, which ratios are going to be important, and what are the problems with comparing ratios between, for example, built and Constructmore. So review all of the ratios, in particular liquidity, gearing, profitability, performance, and so on. So two sets of ratios that I think are important: liquidity, gearing. Gearing is something that's going to be of importance. You're given quite a bit of information about gearing. Gearing is mentioned in the chairman's report, so I think gearing is important. So finally, I think the thing that I would take out of F2 is learning outcome C1, C1C. And this says action that could be realistically taken by the entity's management to improve financial performance and strengthen financial position, taking into account ethical considerations and internal and external constraints. It seems to me that summarizes what this case study is about. The company has found itself perhaps in a tight financial position. It's running out of cash. Its share price has tanked, and coincidentally, I mean, we don't know, but at the same time the shares fell sharply was the time that the public announcement of the PFI, Private Finance Initiative, was announced on the 6th of January. And that perhaps implies there is a good proportion of Build's business in that sector. And if the sector understood that money would be needed to finance these activities, and they looked at the balance sheet of Build, then if I were an investor, I'd probably want to put my money into Construct more rather than in Build. And so the share price has dropped suddenly. We don't exactly know why, but they're certainly not in a good position. And so how do you as a management accountant help to provide advice about what might be done? What might be done might be to restructure the subsidiaries. What might be done was to centralize maybe some of the purchasing functions. What might be done was to look at the measures of financial performance. What might be done would be to change the way people present information and so on. So that's the sort of area I think you might get asked about. So let's conclude by looking at what you're going to get asked to do in an exam. What you've got is the unseen material going to be presented to you in an exam. And once you've read that unseen material, you're going to be asked to do something. And it might be something like write a report, write an email, make some notes, and so on. So what I'm going to do now is just talk about if you're asked to write a report, so how would you do it? If you're asked to write an email, how might you do that? So if you're asked to write a report, what we want to make sure is that it's brief, short preview. This is a report about something. It doesn't need to be an essay. Don't write long paragraphs, long words. You can use bullet points, just like this components of business reports. Get to the point. If you wish, list the main points. There are 3 points I want to raise, list them, and then follow by some expanded descriptions. If you want to use a heading, don't underline or highlight or make bold everything or use capital letters. Use it very selectively. It's not really going to be possible in the exam situation that you're in to possibly produce graphs or tables, but if you could, images are useful. And if you're giving your own point of view, then say, this is my point of view. It's not a fact, this is what I think. It's an opinion. Okay? And if you're going to give recommendations, then also mention how you're going to implement those recommendations. It's important that you consider both. And if you're asked to write an email, this is from one of the CIMA examiners. Candidates should consider carefully the actual requirement of the email, the purpose of the communication, for whom it is intended, and the salient points that he or she wishes to communicate. So before you start writing, what is it that you're being asked to do? Who is it going to? And what is it you want to communicate? So you need to think carefully about the major points that need to be included in the communication. You also need to think about the effectiveness of the communication. It should be clear, it should be to the point, and it shouldn't be ambiguous or verbose. Verbose means just too many words. So here's an example from a previous T4 exam. Part B, provide an email to board members on the differences between profit and cash. So that's one thing. And the significance of cash flow in the oil and gas and exploration industry. So the first thing you need to do is to address your email correctly. In this case, it's to the board members. So if it's to a particular person, put that person's name. Who is it from? Well, you're the senior management accountant, so you need to put your title there. You can put your name, but I think it would be better, senior management accountant, and put the date that you're doing it, unless the requirement of the question suggests that you need to put another date. A little header. Differences between profit and cash. You don't need a whole essay here. We can understand. Anybody reading this can know what you're doing. And just bullet points. Number 1, profit is an accounting term. Number 2, profit includes non-cash items. That's all it's needed. You don't need to go into long things. And then if there's another part of the question, and the question is asking you for 2 parts, starts with another title. And if you want, continue the numbering or start the numbering again, or bullet points. So keep it clear, keep it to the point, and don't use lots of words when you don't need to. And if you're addressing somebody, if you're addressing, for example, the finance director, you don't write the words hi, H-I. Hi, Mary. Be more formal. Good morning, Miss Smith, or good morning, Mary, or something. Be careful about being too casual, but also be careful about being too formal. Esteemed sir, or dear sir. I mean, in Australia we don't use terms like that. So be clear, to the point, and not verbose. So here's a few samples of what you might get asked to do from the Pearson VUE or sample CIMA case study exam. So let's have a look at these examples. Describe the impact of the announcement. So these sort of things you're going to get asked to do are not going to be the traditional questions that you've been asked in exams. Calculate the net present value of this proposal. And there's an answer which is correct or not correct. You're not going to get asked to do things like that. You're going to get asked to do something quite open. So describe. Now what you need to do here is think of the verb. Describe. And in this case, write or prepare or respond. Think of the verb. Highlight the verb and make sure you do what the verb is saying. Describe doesn't mean evaluate. Describe the impact of the announcement on the share price. So this is quite open-ended. You could write for 10 minutes or half an hour. If it's describing the impact, you just want brief sentences. And you don't need to write a formal report. The impact on the announcement of X share price was number 1, number 2, number 3. Second example, write an email to Sarah Harris on the current recruitment strategy. So the email should be addressed to Sarah Harris, and the subject would be current recruitment strategy from you, the senior management accountant, and you might say, good morning, Sarah, or hello, Sarah, or something. Not too formal, not too informal. But an email needs to be brief. So you need to make sure you time yourself and you only spend as much time on that as you need. This is one of the more difficult ones. Prepare your notes for a meeting with the finance director about something. So in this case, for this particular case study for Build, you might get something, prepare your notes for a meeting with a finance director about performance measurement, or something like that. And what you need to do is you need to show the examiner that you are aware of the issues involved. So you need to write down what sort of issues you see, and you need to then, as it were, provide the examiner with the level of your understanding. But it's very open-ended here. So you need to be careful about that and respond to recent press reports, etc. So every time you write something, a report or an email or some notes, you need to think about this. Your job as senior management accountant is to translate the strategy, not decide, not offer a strategy. That's the board of directors' job. Your job is to translate the strategy and communicate it to lower levels for implementation. You monitor and you report on implementation of strategy, and you ensure corrective action is taken when required. So this corrective action may be certainly something with this particular case study. It has a medium-term focus. So you've got to make sure when you're writing these things that you remember your role here. You are the senior management accountant. You're not the CFO. You're not a board member. You're a senior management accountant, and you are providing this level of service. So let's go back here. Who are the key stakeholders here? Well, there are a number of stakeholders that we need to think about. Obviously, the management team of each of the elements of Build are stakeholders. The shareholders of Build are stakeholders. The suppliers of Build, the subcontractors of Build, the customers of Build are all stakeholders. Product and pricing decisions, performance evaluation of divisions. It's obvious to me reading the case study that the performance measurement system that's in place is wholly inadequate to communicate what's happening to the board of directors. What is the impact on the financial statements and the performance of the organization? Well, there's a lot of things here. So again, ratio analysis and making sure that the statements actually reflect what's happening. So selling office blocks from one division to another, that may be something that's not disclosed properly. Having things off balance sheet may be something that's not disclosed properly, and those sort of things. But the performance, the ratio analysis of the organization, I think is the key thing there. Well, that's all from me for this case study Build. I found it very interesting, and I hope the two films have helped you to maybe see it in a different light. Like all these things, the key to passing exams is preparation. You need to be prepared like you are in business. You go to a meeting and you need to know about this business. You're expected to be the senior management accountant of Build. And if you're working there, like you obviously work in your own jobs, you should know about this company. And that's how you've got to respond in these case studies. Like somebody in a real business who's had some experience of that business and knows what's going on and can speak intelligently about it and offer, in this case, management accounting advice. So, good luck with your exam, and I'll maybe talk to you again another time. So bye for now.